Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Snehi Shah. And in the next 1 hour, we'll get you all the buzzers in trade today and why they're buzzing on the back of news flow or on the back of technical charts. But first up, let's take stock of how the market is shaping up. Good day, Snehi. After two sessions of losing streak, we have snapped that and we are managing to hold on to a percent gain on the Nifty and 1.5% on the Nifty Bank.
Absolutely, looking good. We're comfortably higher from today's lowest point of 24,054. So about 260, 270 points higher from the day's lowest point. 300 points uptick coming in on the spot today. 24,340 levels is where we are at. Gains of more than 1% coming in on Nifty. Same can be said for Nifty Bank, rather that's outperforming Nifty. 1.5% uptick coming in on Nifty Bank, close to the 55,500. In fact, we've just reached that. 55,500 is what we're seeing on Nifty Bank. Sensex 2 in tandem with the benchmarks, a 1.3% uptick coming in on the Sensex as well. India Wix is lower by 1.5%, looking good. Advanced decline quite balanced, but slightly tilting in the favor of the advances, so that's also looking good today. A couple of gainers that are keeping the Nifty afloat today. Reliance up and away in today's trade, almost 6% uptick now coming in on Reliance. You have SPL that's up 2.7%, Sun up 2.6%, BEL, Axis Bank, JSW, Cipla, Tata Steel all trading with gains of more than 2%. On the flip side, pressure continues to build for Shriram Finance, that still continues to be subdued, a 5% cut on that stock. HCL Tech is lower by 2% and you have Zomato seeing a 0.5% cut as we speak. So all in all, it's the IT sector that's in pressure right now. That has also seen a little bit of a recovery, but 0.3% lower is where IT is. Other than that, all your indices are in the green, all sectors, with PSU banks being the biggest gainer, about 2.7% uptick there, followed by pharma, energy, metal, auto, realty, media and FMCG. That's the pecking order. That's what the breadth of the market is looking like right now.
All right, let's move on with the show then. Sameet Chavan, who's the head of research, technical and derivative Angel One, is joining us on the technicals, and from our research team, we are now joined by Rabinder and Ansh. Hi, good afternoon to all three of you. Thank you so much for joining us. Let's get started with the show then and talk about the top Nifty loser, which is Shriram Finance. That's in focus. In fact, it fell as much as 9% today after its March quarter results, which had write-offs in its gross non-performing assets. The gross NPA were worth around 2,345 crore rupees during the March quarter. In fact, even the PAT, the NII was behind the estimates, primarily due to the NIMs driven by higher liquidity on the balance sheet. Also, the credit cost was elevated as the company wrote off 5.3% of gross NPAs that were provided for it in totality. Now, the company's net slippages rose for another quarter, and the management has indicated stress in few pockets. The brokerages are maintaining, however, a bullish stance of the stock, but they have cut their target, their earnings estimate. They're warning of risks to the company's NIMs and the ROA as well. Now, Macquarie has maintained an outperform rating on Shriram Finance with a buy price, with a target price of 800 rupees. CLSA has maintained an outperform rating on the stock with a target price of 670 apiece, and Morgan Stanley is maintaining an overweight call with a target price of 750 rupees per share. Kotak Institutional Equities, HSBC and Citi are maintaining a buy call on the counter with a target price of 750 rupees, while HSBC is maintaining a buy call with a target of 740 rupees. On the back of that, Shriram Finance is in focus today.
Absolutely, subdued quarter four coming in from Shriram Finance. We were able to interact with the management of the company earlier because after posting an inline set of quarter four earnings, Gayas Chakrabarti, the MD and CEO of Shriram Finance, says that they are now aiming for 15% growth, but he's confident of achieving this anywhere between 17 and 18% as well. Let's go across and listen into the guidance he shared with us earlier in the day.
Say my disbursement in new vehicles grows, the AUM will grow disproportionately because of the longer tenure of the loans in new vehicles. So, I don't think it's a great barometer there to look at disbursement versus AUM, but that's the reason why we are looking at growth of asset rather than just plain disbursement. Though we are guiding for 15%, but I would say, what we are aiming at is between 15 to 18%. So I think we should end up somewhere between that. We are not looking at growing at 20%, 30% AUMs. We would be very happy to grow at 17, 18%. Though you are guided for 15, we would be happy to grow at 17, 18% and would like to focus on the bottom line more. Probably by the second half of this year, we should see the liquidity coming down substantially. to its normal levels. And yes, our borrowings would be a little lower compared to what we have done last year.
All right, moving on from Shriram Finance to defense counter HAL. Coming to you, Sameet, you have picked out HAL for us on the chart. That's up 5%. In fact, the entire defense pack is in focus today. On the back of that Kashmir news flow that's been coming into the defense pack is in focus, has been in focus since then. But HAL has done well in the sense that it has managed to stay strong amid the market correction as well. But from here on, where do you see the stock headed?
Good afternoon. See, we have already seen decent correction in most of these defense counter. Most of the counters, from the space have corrected 30, 40 odd percent in last, 6 odd months. Recently, in last 3-4 weeks, if you see the price action, stock seems to have formed good base around its, 3,000, 3,100 kind of mark. And from there, we have already seen a decent recovery, more than, 30, 35%, recovery in last 4 weeks. The kind of price action that we have been witnessing since morning, the stock is now, appearing to give another breakout from its, bullish flag pattern. It also traverses its 200-day simple moving average. So looking at the robust volumes, we expect this move to extend. Next levels to watch out for would be around 4,600, 4,650 as far as HL is concerned. Any dip would be a good buying opportunity. Now the support, which was earlier around 3,500, 3,600, it has now shifted higher to 4,200.
Okay, so the levels to watch out for on HAL. Let's move on and talk about Tejas Networks. This stock is under deep pressure as we speak, and let's understand why this has happened. This stock is lower by almost 12% as we speak after the company has posted a net loss during the quarter gone by compared to a net profit during the same quarter last year. Tejas Networks has reported a net loss of 71.8 crore rupees during the quarter compared to a profit of 147 crore rupees this time last year. This is the first loss after 4 consecutive quarterly profits for the company, and revenue for the quarter has increased by 43.7% to 1,907 crore rupees. EBITDA has fallen as low as just 21 crore rupees compared to 306 crore rupees it saw in the base quarter, and the company has also made a provision of 117 crore rupees for inventory obsolescence and write-downs during the quarter. Very poor set of numbers coming in from Tejas Networks for quarter 4, and on the back of that, the stock is under deep pressure today. 11.6% lower is where the stock is as we speak.
All right, moving on from Tejas Networks that's reeling under deep selling pressure to the one that's really buoying the sentiment, and that's RIL. Buoying the entire nifty pack there is Reliance, which came out with its quarter 4 numbers. Ansh, tell us, what does the number look like and what are the bullish brokerage notes also saying?
Right, so the net revenue was up by around 8.9% for the company, and PAT, that was up by 4.7%. Overall, it was a mixed set of number, but revenue, PAT and EBITDA, that was above estimate. With this, Reliance Industry becomes first Indian company to cross that net worth of 10 lakh crore. And for FY25, capex was at 1.3 lakh crore. Net debt went up marginally to 1.1 lakh crore. Now we have a report from Nomura, and they have given a buy rating. Target price has been raised to 1650. They have said that the company has delivered robust results across a segment, and there are 3 near-term triggers. First is scale up of new energy business. Second is upcoming tariff hike for Jio, and third is potential IPO listing for Jio, which will drive value unlocking for Reliance. Also, if you see on chart, then the stock seems to have given a good breakout from its downward sloping resistance trend line and has touched 6-month high. In addition to this, the stock has also surpassed above its 200 DMA today.
All right, moving on from Reliance Industries. Sameet, you have also picked out Reliance on the charts for us. Tell us, what does the chart say? Now, it's given good moves today, but Reliance has been one counter that has taken its time to move up. So from here on, where do you see this headed?
Yes, it has definitely taken some time, but now from here on, we are likely to see some good action, in this major heavyweight index. If you specifically look at its contribution in the Nifty 50 index itself, Reliance has already, added nearly 110 points in Nifty 50 index itself. So that suggests, what kind of importance this particular stock has. Technically speaking, yes, it has already given a decisive breakout from a V pattern on daily time frame charts. It has already traversed its 200-day simple moving average. So now the next important level to watch out for would be around 1450, 1470 for Reliance Industries. And if that happens, then yes, so we would see Nifty surpassing 24,500 as well. So that bodes well overall for market sentiments as well. So any depth from current level would be a good buying opportunity. 1350, 1330 would act as a very strong support.
Okay, buy on dips is a strategy coming from Sameet on Reliance. Let's move on. Ravinder, you've picked out RBL Bank today, and the stock is in focus, and it's up 10%. We believe it's a strong set of Q4 numbers coming in. Tell us what the earnings fine print is, and tell us what brokerages are making out of these numbers.
Well, yes, RBL Bank is in focus, where company has announced its Q4 FY25 number, and the company reported a NII at 1,563 crore, which was down by 2.3% year-on-year basis, and bank was expected to report losses this quarter, but was aided by the contingent buffers, and NIMs saw at 4.89% in Q4 FY25, and the slippages declined to 4.6% as compared to 5.9% in Q3 in quarter, with approx 90% of slippage is driven by credit cost and MFI segment, and RBL expect a sharp reduction in delinquencies in this portfolio over H1 FY26, and the credit cost was at 3.4%. The secure retail and SME to drive loan growth in FY26, guiding for almost 16 to 17% loan growth, and FY26 credit cost will go down. And there are some brokerages not coming on RBL Bank, where IFL has maintained their ad rating with target price of rupees 210. They say that they expect credit cost to improve to 2% in FY26, and Investec has upgraded the stock to buy from hold with target price of rupees 230, and Motilal also upgrade the stock to buy rating from neutral with target price of rupees 220. So back of this strong Q4 earning, stock is up over 10%.
All right, moving on then to another counter which is an earnings candidate, and that is DCB Bank, that has posted its Q4 results. Let's look at what the results look like. DCB Bank, the net interest, the NIM, the NIMs have been up 20% on a year-on-year basis. We also had the NII that was up 9.9% at 558 crores. The PAT was up 13% at 177 crores versus 156 crores, and the PPOP was up 22%. A good set of results coming in there. The NNPAs were also have also improved, and they have come down by 6 basis points. The GNPA have also shown a marked improvement and come down 12 basis points, and on the back of a strong set of numbers for DCB Bank, that's up and away 9% in trade.
Okay, looking good. Good set of Q4 numbers coming in. Let's also go across and listen into what Praveen Kutty, the Managing Director and Chief Executive Officer of DCB Bank, had to tell us earlier about the growth and organic loans going forward.
If you were to see the last 4 quarters, you've seen that quarter after quarter we have been growing near about 20%. I tend to presume that we would continue in the same trajectory. There's a lot of work happening to bring in a bit of predictability and consistency in what we do. My belief is that we'll continue on the same trajectory, where top line and the operating profit march in goose step, and have a tight rein on the credit costs. So probably in the coming few quarters, you would see more of organic loans coming through as compared to co-lending. So there will be a skew in favor of higher yield products within the credit framework which we have, the business strategy that we have adopted. We're looking at a NIM stabilization in the wake of 2 rate cuts that we've happened. Going forward, on the immediate basis, there has been some cuts on the savings account rate, which is an immediate impact. But as matters stand, at the present rate, we really believe these 2 items on the liability side and 2 items on the deposit side would help stabilize and shore up the NIM in the coming quarters.
Okay, that's the word coming in from the management of DCB Bank on the outlook. Going ahead, let's move on and talk about a stock that's up and away in today's trade, but not a lot of people are talking about it since this news flow came post-market hours on Friday. So it's been a couple of days since they've announced this, but Guarded up almost 8.4%. The company has announced on Friday post-market hours that they will enter into a 30-year lease agreement with the Shyama Prasad Mukherjee Port in Kolkata for a land parcel at Timber Pond, Howrah 2. This step aligns with GRSE's long-term vision to strengthen its infrastructure in line with the growing domestic and export demand. The proposed leased land, with its valuable waterfront access, will support Garden Reach's initiatives in shipbuilding, ship repair and other engineering activities. So 30-year-long lease coming in at the Kolkata port, looking very optimistic for the company. Stock is up and away 8% higher as we speak.
All right, that's GRSC doing well in trade, up 8% in trade today. But coming to you, Ansh, GAIL is a name that is in focus today. Tell us what's the news flow here.
So, GAIL and Concor has signed MOU to explore LNG adoption for logistics fleet. The move aims to assess the feasibility of using LNG as a cleaner, cost-effective alternative to diesel. LNG adoption could help cut emissions and bring down operational cost as well. Whereas this partnership also highlights India's growing push towards sustainability and energy efficiency in logistics. With this, if you see the stock, then it is trading with a gain of more than 1%. Also in last, from April lows, it has given an up move of more than 10%. So for those reasons, the stock is in focus today.
Okay, so GAIL in focus, doing pretty well, up almost 2% as we speak. Ravinder, coming to you, you've picked out the stock of the day, the biggest story of the day, and that's the M&M acquisition of stake in Isuzu, SML Isuzu, 59% stake. Tell us more about this and tell us exactly why M&M is in focus, and tell us the contours of this deal as well.
Well, as M&M and SML, both the stock is in focus, where M&M will acquire 58.96% stake in SML for 555 crore, and the company will stand position in trucks and bus segment. Company will acquire 650 per share, which is 64% below the current market price. In addition, M&M will make an open offer in accordance with SEBI takeover regulation. The open offer is being made at a price of 1554.6 per share, and M&M to spend another 585 crore to acquire share through open offer. SML has a market leading position in the ILCV intermediate light commercial vehicle bus segment with around 16% market share, and MS has come out with a note on M&M where they say that the M&M could end up spending around 1140 crore to buy SML, and this will appear to value SML at 16 to 18 times for FY25 PE versus CV names like Ashok Leyland at 20 times for FY25 PE. So back of this news, both the stock is in focus in today's trading session.
All right, moving on, then we also had Rakesh Jejurikar, who's the ED and the CEO for auto and farm sector M&M, discussing the potential synergies from acquiring majority stake in SML. And he also says that SML will remain a listed entity. Let's go across and listen into that.
SML has an electric bus ready. We had not done any work on electric bus. Electric buses, it will be a very fast growing segment as well. So I don't think this is an indication of the fact that other parts of our business won't grow. It's just that what's the new avenue for growth, not just for the auto business, but even as a group. And a 5,000 crore business which can go in the next 3 to 5 years to 10,000 crore plus is not something which is insignificant. Right now, at least SML Isuzu as a separate listed entity will stay a listed entity. The trucks and buses business of M&M stays within M&M. We will look at how we fully synergize operations and resources, talent, platforms to get the growth and scale. So we will have to, in our mindset, even though they are in two separate legal entities, think about it as one.
Okay, that's the interaction we had with the management of M&M earlier in our studios. But let's move on from that. And Sameet, BPCL is a stock that you've picked out for us. It's going to be an earnings candidate, and it's up today in trade. Last 1 month, it's run pretty okay for itself. But last 6 months in YTD, it's been absolutely flat. But on the flip side, last 3 months, it has been very robust on the chart. So tell us, what's the outlook for this stock? Very mixed moves is what we've seen. What are the next price targets that you're watching out for?
See, recent price up move in this particular counter followed by 3-4 days consolidation, and today's massive spike up in this counter suggests that the stock is likely to unfold a good rally in the near term at least. It has already challenged 200-day simple moving average, like most of the other counters that have challenged 200-day simple moving average today itself. This stock is likely to head towards 320 to 328 over the next couple of weeks time. So overall, yes, the chart structure looks quite promising, and once we see a breakout happening in this counter beyond 312, we could see a good move coming in this counter at least in the near term.
Alright, that's BPCL on the charts, but moving on to an earnings candidate, and that's Chola Finance. Now, the company has reported a net profit rising 24% on a year-on-year basis to 1,058 crores in Q4 FY25. That's up from the 853 crores in the same quarter last year. Now, the NII for the quarter has surged 30% on a year-on-year basis to 2,000 crore rupees, reflecting a strong momentum in the core lending operations. Now, the total disbursement for Q4 FY24 was 18% on a year-on-year basis. Also, the AUM, that on March 31st, 2024 stood at 1.53 lakh crores, marking a 36% year-on-year growth. Now, also Chola has announced that it will foray into the gold loan industry in select geographies. Well, the company made this announcement alongside the fourth quarter results, and also the company intends to open 400 new branches across the next 4 quarters in Tier 2 and Tier 3 cities. And on the back of these two news flows, it has given up those morning gains, but currently it is slipped into the red and trading with cuts of 4%.
Okay, that's the reason Chola investment is in for focus. Steady Q4 coming in, stock under slight pressure. Let's also listen into the management that's told us that auto sales impacted overall disbursements for Chola Finance. This is according to Arul Selvan, the CFO at Chola Mandalam Investment and Finance. Let's go first and listen in to what else he had to say about the company's growth roadmap.
Disbursement growth is driven primarily by vehicle finance, which is still a very large part of our book. And vehicle finance, as you know, the auto sales has not been very robust so far. So that influences. But individually, if you see, LAP has grown significantly. Home loans have been growing. That's where we have, introduced these diversified products, which would help us to sort of, balance and still show growth. That's what is happening. We expect the growth in vehicle finance to revive once the rural demand picks up post Rabi harvest, as well as the good monsoon predictions that is coming up in for the Kharif. So with that, we should see some pickup. So we expect around 15 to 17% growth in the coming year overall.
Alright, moving on then, let's go across to Sameet. Sameet, you've picked out Sun Pharma for us. That's up in a way 2.5%. Also in the last 1 month, we have seen some momentum coming in on this counter, upwards of 5.5%. Tell us from here on, where do you see the stock headed?
See, this has been our preferred bet in the recent past within the pharmaceutical space. Stock has already shown good, steady move in last 3-4 weeks. The kind of move that has been witnessed since last couple of weeks, stock has already surpassed its important hurdle of 1800, 1820. And looking at the breakout from cup and handle pattern, the stock is likely to head beyond 1900 in coming week. So overall, chart structure is quite encouraging. Any depth towards say 1750, 1780 would be a good buying opportunity in case of Sun Pharma. And we expect, within the pharma space, this stock to outperform some of its peer count.
Okay, that's the take on Sun Pharma. Those are levels to watch out for. And coming to you, Zensar Tech is the stock that you've picked out for us. It's an earnings candidate. An inline set of numbers is what we've seen for Q4. So take us through the earnings fine print and what brokerages have to say on that.
That's right. So revenue has been reported at 1,359 crore, which is about 2.5% on quarter-on-quarter basis, whereas profit has seen a good jump of more than 10% from 160 crore directly to 176 crore. Talking about EBIT, we are seeing a good improvement here as well by 2.9% sequentially. Also, margin has actually improved a bit slightly from 13.8% to 13.9%. And we have a report from Nuvama, and they have given hold rating on the stock, and they have raised their target price actually from 680 to 700, and they have said that the 0.9% CC growth is better than the estimate of 0.5%. With this, TCV stands at strong at $213 million, which is up by 4% sequentially and more than 17% on year-on-year basis. Also, management has flagged some demand deferral due to macro uncertainty, which could impact Q1 of FY26 growth, but overall it looks positive.
Alright, with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back after the break. We're getting you some more buzzers on the other side. Stay tuned.
If you like this video, then like, share and subscribe to ET Now.